May profits be upon you, my people. I want to give a good shout out to all of my supporters, all of them. All right, I want to let you know that I appreciate you tuning into my videos and subscribing, sharing, and dropping a like. I really appreciate that. It helps the YouTube algorithm. It helps my channel to grow. I'm letting you know I got my hands on my chest, on my over my heart, saying I appreciate you. I appreciate you, and I appreciate more if you give me some feedback, give me some questions, give me some scenarios, give me something. All right. I like your feedback. I like to interact with my people. All right. Special shout out to UCL Energy Group. All right. And the Eagles. All right. I like hearing from you guys, man. I appreciate your support. All right. I love my Eagles. Okay. And special shout out, of course, to all my Lion Den Effects supporters there. You know, those who enjoy this style of trading, all right, and want to learn more. Hey, let's get it. Let's get it this year. Let's make 2022 the best year we've ever had. All right, big up to my man Drunk. Let's get it, big guy. Let's do it. Drunken Monkey at Lion Den Effects, the godfather of the Lion Den Effects. All right, he is our founder and he is the master of the markets. All right, so let's move on to Dixie. All right, we're going to do a top-down analysis from the monthly. All right, I'm going to get right into it. I'm going to bite these. I'm going to bite these. I'm going to break these markets down into individual videos so that the overall length is shorter and I don't have to, you know, hold you guys in a headlock for your attention. All right, so we're going to make it a little bit more consumable. All right, consumable. Let's go to Dixie. All right, we're going to see what the forecast might be for the moves of the USD coming up. All right, what do I want you to notice? All right, we have this big impulse here. Got a big impulse here, right? This is from 2014. All right, we made a higher high. We made this high, right? We broke this high. All right, after a little pullback, we broke this high. Now we have a higher low. All right, and we break this high again, taking the liquidity from that top. All right, then we break structure here. We break that higher low, which means what? The market has turned bearish because we have a break of structure to the downside. All right, while we're breaking that structure, when we break structure, you always think about that. What caused that break of structure? That impulse, that originating impulse is tradable. All right, that is a strong high because it did its job. It made a new low. That is the job. A low is only strong if it breaks the high. Got it? A low is only strong if it breaks the high. If it's weak, you hear that? If it's weak, if it doesn't break the high like it did here, then this becomes a liquidity target. All right, lows that don't break into a new high become liquidity targets. Now, there is, you know, you can argue that it did make a new high by breaking this swing high here, all right? But it didn't break the originating high. It didn't break this trading range, all right? Now, if you consider this the trading range, yeah, it did its job, all right? This is a pullback, but I don't know how significant it is. I count it myself because it's got two candles on it and it seems significant, just significant enough, very borderline if you ask me. All right, this becomes your trading range. Once you break that trading range, you break that structure, this becomes bullish again. This market becomes bullish. All right, and then we work our way up. We take that strong high, we take a high probability short from here, and we drop, break all of these lows. These are swing lows. All right, these are swing lows. Okay, all right, and this one here, you can argue is responsible for that high. This you could call this a higher low. You could, all right. This is very another borderline for me, but it's deep enough. And once we break that, we turn bearish. And look how price fired through it. Fired through it. All right. Did we make a new low? No, we didn't come past this low. Okay, so that's something to note. We tried to break that low, and then we tried again, but it didn't even break this low. So the liquidity is still intact here. The liquidity is still intact here. That makes this a target. Price doesn't have to come back tomorrow. Doesn't have to come back in a month. It doesn't have to come back in a year. From here, it was 2017. From here, it's 2020. All right, took 3 years for it to come back here to take that high probability short. So when it comes back by these lows, to take the liquidity of these lows, hello, you know, we just have to set an alert and be patient for it to come on back there. We don't have to wait on it. We just mark it, and we get alerted when price does start to come back and say, hey man, I'm about to take these lows out. Okay, so here we are. This is where we need to be. Sorry, this is where we need to be, paying attention here. All right, let me hurry this up. All right, we pull back, we come down. All right, this swing high was beat here, but this is a significant high. This is a break of structure. Once we come back past it, we're breaking demand. I mean, supply here. We're breaking supply here. All right, that means who's in control? Demand is in control. We broke supply here. All right, we had the reaction. Price came back down. This is where you could have took your long and took it up to the next station here. All right, these are month-long candles, so you know these were delicious trades, let me tell you. All right, but the bottom line here, we are bullish because we broke structure to the upside here. We are bullish. This is a bullish market. Remember that, monthly, bullish, right? Let's go to the weekly. What do we see here? We're going to stay right in this area because this is what is most pertinent. All right, we see the swing high here. We see how it formed a supply. We see how price ate its way through that. We got the reaction. We got the reaction here. Excuse me. We got the reaction here. Here is the reaction. We pull back. This is where you would take your long because this is what broke the supply. You wait till price comes back and then you take your long position. This is a high probability trade. This is called a supply to demand flip. Supply to demand flip. It's a flip zone. And we continue bullishly from here. We have another one here. Boom. You see the reaction, right? Then from here, price shot on up. You make sure you mark this order block because from this low, we made a new high. We have a bullish order block here that broke through supply. From demand, we broke through that supply. So who is in control? Price has wrested control of demand. I mean, of the supply. Demand has wrested control of the market from the supply here. All right. So we come up to again another supply zone. All right. We have our reaction. And here we are. Do you notice this magic trend line here? I want to take you to the daily. Now, so let's note it that on the weekly, we are bullish. We are bullish because price is still moving up. What is the expectational? Let me take you back. Let me make sure I do this right. What is the expectational order flow here? What is the expectational order flow here? I will tell you if I can get this thing together. Let me get this out of here because I'm driving myself crazy. All right. The expectational order flow is we broke that structure to the upside. We are still bullish. We are still bullish. Demand has been hit. We hit demand. We are correcting this impulse. Every impulse gives a correction, and then we wait for the new impulse to begin, right? Impulse, correction, impulse. That's how price moves, right? So that's what we're waiting on. The expectational order flow is a higher low to be made for a higher high to follow. That's the way I'm following it. All right. Do I think that this is the area where price reverses and we start heading down? No, I don't. No, not as long as demand is in control. All right. If price starts breaking demand zones, once we start violating demand zones to the downside, then I will start to think this is probably going to be a bearish market. All right. Now that's the weekly. So we got the monthly and the weekly. We're thinking bearish or bullishly. All right. On the daily, we got this. We have a why did it shrink? All right. We have this this trend line, right? We got a nice little trend line here. And I call it a magic trend line because a lot of people use it thinking magical thoughts. It's that we can take buys here, we can take buys there. Yeah, it'll work. It'll work there until this happens. All right. They know, I mean, it's market makers are going to catch retail traders who trade these old traditions, like trend lines and stuff like that. Some people don't even use trend lines. Some people swear by them. If you know how to use these tools, you can make money from them. You can be effective with them. All right. I mark them because I'm thinking if I were a retail trader, and I am, but if I was the typical one, the one that loses, 90% of retail traders are losers in the market. All right. Or is it 97%? I don't know what the number is, but it's pretty high. Anyway, I use this so I can follow the footsteps of institutional traders. All right. And wherever they take their buys, that's where I want to take my buy. All right. Wherever they leave a footstep, like an order block that saw a price impulse from it, I know that when price comes back here, there's a high probability chance it's going to continue higher because it broke demand along the way while it was going up. So what am I looking at over here? We've ran into supply. All right. I believe that the trend on the daily is still up. I think that is still intact. All right. And I think we're going to go up and visit these highs. We have relative equal highs up here. And I know price is attracted to it. Okay. And we are bullish on the higher time frames. The expectational order flow is for a higher low to be made and then a higher high. Is this the higher low? I have reason to believe that it may be, because if I measure from the swing low with a Fibonacci retracement tool, if I measure from the swing low to the swing high, here we see that we are perfectly tapping the 618 golden ratio. Look that up, folks. The golden ratio of the Fibonacci retracement, the retracement tool. All right, 618, high for just a magical number. And once it hits this, I'm looking for price to hit the 50, hit the 38, hit the 28 on the way up. You understand? All right. I'm not a Fibonacci trader. I'm just using it as a measuring tool. That's all. All right. And I don't like to take longs in a trading range unless it's below the 50% mark. This is the trading range from here to here. All right. From that higher low to this higher high. If price is still above the 50% range, this is premium pricing. I want the discount pricing below 50%. I want price to come down here, give me the best price possible for a long, and then take it up so I can have higher risk to reward, right? Boom. All right. So that's what I'm looking at here. All right. Now we're going to get down to the nitty gritty, what you came here for. What's next for the Dixie, right? What's next for the USD? All right. Who's in control here? it looks like supply on this time frame is in control. You see the supply chain. We have supply zones chaining, right? Down, down, down. We break structure to the downside. That lets me know we are bearish, right? All right. Now, you see how price comes back up. What did we hit? We hit a higher time frame point of inefficiency, imbalance. If we look on the monthly, I should have pointed this out earlier. If we look on the monthly, we can see that dotted line here. This is where the imbalance is. This is all buys. Price likes to come back by, and it comes back with sells and fulfill those resting selling orders in here. All right. And it comes back by with this wick. It wicks down to fill that price inefficiency, that imbalance. Okay. Price always does that. You see this imbalance here, and then you see the rebalance of that imbalance. You understand? That's the way it works. That's the way price moves efficiently. All right. When it's inefficient, it comes back and cleans up that mess, that inefficient movement. Okay. So if we stretch that over here, you'll see that's where we are. But price was filling in this inefficient move on the monthly, the higher time frame. So back to the 4 hour. These are places that a lot of people will take entries. Some people call these mitigation blocks and whatnot. But you see how perfectly it hit that and then bounced back above that trend, that magic trend line. Okay, just an observation. Okay, so who's in control here? Is it demand or is it supply? Well, we hit the supply zone. You see how we took the liquidity of this top. Once price came back up here to the supply, we had a pullback, formed a bullish order block, took out this high, took out that liquidity, and then came back down, mitigating this bullish order block. What am I thinking? There's two things. All right. What I'm going to look for on the lower time frames, because I checked the 4 hour, 15, and the 1. All right. When I'm doing intraday trading, all right, I'm looking to enter in on the 1 minute. I'm looking at the 4 to get the 4 hour to get my narrative to find what is the expectational order flow. All right. I'm looking on the 15 to get my immediate bias. Or who's in control, the demand or supply, the supply and demand. Who's in control, the bears or the bulls? All right. And then I go to the 1 minute to get my refined entries. All right. Those I don't like saying sniper entries. I like getting 2 to 5 pip, and even 5 is too big. 4 pips is too big. But I like to get 4 pips or less on my stop losses so that I can have the highest risk to reward. All right. I don't want to stay in a trade for 3 days to turn to get a 1 to 2 or 1 to 3 risk to reward when I can get 1 to 10, 1 to 20, and I can do it within the same day. I can do it within an hour. You understand? But if you don't understand that logic, I'll show you in another video, or you check out my other videos. Okay. So what I'm looking for here is, will price hold here? This is the 50%, a very important area, the median threshold of the order block. Once price hits here, all right, I'm not thinking it's going to take a whole lot of hits here. All right, the mitigation, 1 or 2, and then this becomes violated. All right, so right now we're on the 1, right, and it looks like we're moving bullishly. Maybe we come back and then we come take out those highs, and we are heading towards the midpoint of this order block. All right, that's one scenario. The other scenario is if supply is indeed in control here. All right, do we see price come down and break these demand zones? if we see supply breaking demand, all right, and we break back below this magic trend line, I'm going to start thinking sells in this market. I'm going to play the major currencies to the weakness of the US dollar. All right. Be careful Wednesday, Thursday, and Friday, because US dollar, it's got some news, some high impact news coming out. Okay. And those are the scenarios that I'll be looking for. US dollar. So where I'm leaning, I'm going to tell you, I'm leaning here. I'm leaning here, and that we will continue up, take out this high, target that high. Why? Because we didn't make a new low. We did not make a new low. There is relative equal highs down here. All right. There's relative equal highs down here. But I'm thinking that, you know, because of the higher time frame, expectational order flow, the fact that we have pulled back to a perfect 618 Fibonacci retracement to the golden ratio, you know, I'm thinking that the next move is to make a higher high. But I will not, and you should not, stay married to a bias. You read what's in front of you and you react from what price gives us. All right, that's what you do. You prepare with a bias in mind. If it does this, then I'll do that. If it does that, I'll do this. All right, but you don't stay married to it. All right, let price prove and demonstrate what it wants to do. If it starts breaking the demand zones, then we know we're going back, we're going bearish on this market. But if it continues high, if it continues to break these supply zones, which we've done up until this point, we had a big impulse up here. We have this correction. I'm thinking we're going to have some more follow through. Okay. I hope you found this educational, beneficial, and nutritious. All right. If it's nutritious, that's the guys I want to talk to. The guys that are trying to feed their brains, the guys that are trying to feed the hunger to improve and become the best trader they possibly can be. All right. I'm trying to give you good brain nutrition. All right. I'll see you in the next video. Check out the videos that are up on your screen right now, because like I said, I'm breaking them down into bite-sized pieces for you. Check you later.